We're just fewer days away now until the Bitcoin halving, which reduces the supply of new Bitcoins. Currently, Bitcoin price is sitting at $62,710. Explain to the audience what you think has happened even in the past week, both in terms of the run-up and maybe this move lower.
Well, let's put everything in context, right? Talking about Bitcoin is crashing to $64,000 was a dream just a few years ago. So we're up significantly. Since the last halving to today, about 4 years, we're up 800%. So it's been incredible performance. This year to date, it's about 40%. Compare that to gold. Gold's up 7%, year to date. And in the last 5 years, it's only up about 11%. Now, the reason why I bring that up, what I think is really interesting is you actually have lost purchasing power if you've held gold over the last 5 years. Inflation has outpaced gold's performance. So the whole narrative of gold protects your purchasing power is now been debunked, right? For the last 5 years, that's not true. So when we start talking about this price run up, that 40% increase to start the year, all of a sudden, why is the price going up? ETFs are a huge piece of it. Also, I think people leading into the halving, that's a big piece of it. But the government has decided we are going to debase the currency, right? And I think that now the world has understood the United States has a debt problem and we're going to debase the currency. So there's some of that going on as well. Now, over the weekend, the price sells off. And I think there's really three things that drove that price sell off. The first is that whenever there's a moment of fear, right, everyone panics. And what do? They still buy dollars. And so some people are selling because of that. The second thing is on the weekend, even though the Bitcoin market is open, the bank system is not open. And so you can't get net new dollars into your crypto account to buy Bitcoin. So the only thing you really can do is if you're holding Bitcoin, you can sell it. But most of the people holding Bitcoin are fully allocated. So they don't have dollars to go buy more Bitcoin. So there's a very interesting dynamic where even though you want to buy more Bitcoin, you're closed out of the system as well because the banking system won't let you wire in.
You're saying people would have bought Bitcoin on Middle East tensions if the banking system were open?
The joke is that the real Bitcoiners want the price to go down so they can buy more of it.
So what have we seen since then in terms of the price of, we didn't go up a lot.
We didn't go up a lot, but we're basically flat since
So no one is buying
since Monday.
On the heels of Middle East tensions.
Well, I think that the other thing that's happening is that now Bitcoin is being pulled into the legacy system. And so now it's very hard to kind of prove this, but high frequency traders and kind of more algorithmic trading, when all of the news hit Twitter and kind of the social sentiment changed very quickly, you saw a massive amount of tweets about Iran and Israel and rockets and drones, et cetera. There's a very quick sell-off. I find it hard to believe that humans were able to read Twitter, immediately go to their computer and start hitting the sell button. And so there's got to be some algorithmic trading that's going on there as well, where people are trading headlines, but it's unclear how to measure that.
Let's just understand this, because part of it is, so the folks who are selling likely are selling actual Bitcoin, not the ETFs, because this was happening
closed
over the weekend, right?
Correct.
And so, but then the question seems like the natural follow-up is why were they not back in the market, either via ETFs or something, put the algos aside since then, and on the back of what I imagine is you think a bullish sign on the halving piece of this, which is about to happen.
I think that markets are forward-looking, and part of my analysis is just that, we went up 40% because people are already pricing some of this stuff in. If we go and we look, we had Russia invading Ukraine, we have Hamas, Israel, now we have Iran, Israel. At some point, there's a less severe reaction to each one of these kind of geopolitical events, because I think people are starting to say, there are problems in the Middle East. Right. And so, again, that doesn't talk down the severity of what actually happened. But I think that the financial assets themselves are becoming less sensitive to those movements. And then in terms of buying more Bitcoin, I do think that there's this very interesting dynamic of everybody that I know in the hardcore Bitcoin community. They've bought as much Bitcoin as they possibly can. The net new dollars that are going to come into this industry are going to come from Wall Street. And so what is Wall Street doing? Wall Street's not rushing to go buy Bitcoin today. And so what's going to really play out here is over the next 12 to 18 months, we'll see that impact.
And they're not buying because, the only reason you wouldn't buy today, besides that you may not have the opportunity, which is to say there's an argument that, advisors, a lot of firms don't have it on offer yet. But there's also the view, I think by some, that the price is still going to come down. So how do you see, what do you see as the window for where the price sits right now?
Yeah. So if we look at price movements themselves, Bitcoin's down about 8%, 9%. In 2017 bull market, there was 13 drawdowns of 12% or more. There was 13 drawdowns of 10% or more in the 2020 drawdown from Galaxy Research. And so when you see that big of drawdowns, 8% is actually a pretty small drawdown compared to most times in bull markets. And so my expectation here is that Wall Street is probably trying to time the market a little bit, understand, what's the price level, so looking at technicals, et cetera. But over time, what we have found is that in these drawdowns, they're getting less and less severe. So the asset itself is becoming less volatile, which means that the upside gets more limited, but also the downside is muted.
For the next 12 months, for you, potential high, upside, potential downside?
I think downside is pretty muted at this point. I would say I don't see it going below like 50,000. In terms of upside, I think we get over 100,000 in the next 12, 18 months. Maybe we could get to 150 to 200, somewhere in that range. But like we go up from here. I just don't think people should expect the explosive 1,000% move from here through the rest of the bull market.